Hello everyone, George DeSantis here with a look at the market for the week ending September 1st, 2017. As usual, before we get into the charts, let's read the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice, since I'm not one. We'll begin by looking at some charts. Recently, I've been using TC2000's charts, but TC2000 website is down today, so I'm going to use Fidelity's Wealth Lab Pro charts. Here we have a weekly and a daily chart of the S&P, so we can see them both side by side. First thing we could check is this bearish divergence of MACD we've been talking about for weeks now, actually months, couple of months. It seems as if this divergence has played itself out, because if you look at the price of the S&P, price came down into value, to the value zone. That red line is the 9 EMA, and it rallied up to the upper Keltner channel, and then it came down again to close between the 9 and the 30. The 9 EMA, the red line, red trend line, and the blue line. So we had a buy signal here, and of course it materialized as a good buy signal. We had a bullish Harami, and now we have a very bullish bar for last week's data. At the top of the chart, we can see that CCI is remaining above zero. I haven't shown CCI in a while, but the commodity channel index, as long as it remains above zero, the trend is up. So you can see that once this trend started here, CCI was above zero, and that's the way it is. So the trend is still up, and I don't think the trend is threatened here at all in any way. Williams percent R is now below 20%, and when it's below 20%, confirms the uptrend. MACD is now trending up from below the zero line on the weekly chart. So I believe that the bearish divergence played itself out. We have a nice chart candlestick formation here. It looks very much like a morning star formation, and so we could continue to go higher from here. On the daily chart, we can see that we had this triangle that I drew last week, and calculated a target of 2522 for the S&P, and so we are aiming for that target now as the first target established by this symmetrical triangle. You can see up here that Williams percent R is just touching the 20% line, just below it, 19.47. So that means that the momentum has increased, and it's very high here. MACD histogram is trending up from below the zero line, and it's now in bullish territory. And we can see CCI crossing above zero on the daily chart. So both the weekly and daily charts are looking pretty bullish. We can go back to this daily chart and see that the 9 crossed above the 30 here, and that is signaling the beginning of a new uptrend. 9 crossing above 30, which is the red line crossing above the blue line, telling us that on the daily chart, trend is up. And we know when we looked at this chart, the weekly chart, the trend is continuing to remain up. So let's take a look at some individual stocks now. I'm switching over to Best Choice software now, so we could take a look at the regression channel. And before we get to the individual stocks, it would be good to take a look at the regression channel for the S&P. You can see here that the S&P came all the way down from the 90% line, this upper line here, back down to the zero line and a little below it, and then it rallied up back now to about 51%, 51.6 to be exact. We have room at the top to rally from the 50% line to the 90% line. So that's encouraging from a bullish standpoint. The RSI 12 below here, we could see that it's rallying all the way up here. And if we look at the trend lines, the 4, the 9, and the 30, you can see that we just had that big crossover of the 4 above the 9 and the 9 above 30. It confirms what we were saying before about this market being in an uptrend. And of course, we could look back here and see the same thing happened here when we trended up, and the same thing here, etc. So we are definitely in a nice uptrend on the S&P. So let's switch now to individual stocks. Here's a chart of Apple. We can see that it rallied from the 10% line and even below it, all the way up to the 90% line. So we might say Apple is overbought here. And when it gets to that 90% line, we are likely to see a pullback as we did here. Okay. What do we do? Well, I'm holding Apple and here's why. Let's take a look at the seasonal. On the seasonal chart, you will see that this trend here, this highlighted area here, tells us that from October 7 to October 24th, Apple, 91% of the time, there's a win percentage of 91.67%. 11 out of 12 years, Apple has seen a profit on that trade of 7%, and pretty good rating on the trade here. So there's only 1 year that it didn't make a move up, and that's 2012. With an average move of 7%, I think I'll hold it, and let's move on to something else. Here's Facebook, another one that I own. It is now sitting at the extreme level of 65.9, so there's some more room at the top and not quite overbought yet. Price consistency is strong, 95, and the earnings consistency is 100%. Let's take a look at the seasonal chart. On the seasonal chart, we'll see what is the best trade on this one. Again, you see October 10, just around my birthday, in fact. October 10 to October 24th, we have 5 out of 5 years. This thing has rallied up for an average profit of 9%. So again, holding that one. Take a look at another one. And here's a chart of Visa. I own it. I don't intend to sell it. I see it as a long-term holding for a number of reasons. Notice how close together these lines are, these regression lines. And on Best Growth Software, it shows you this is the kind of stock you want to hold for the long run. There is very little volatility here. The other thing that stands out here to me is earnings percentage growth is 242.7 over this period of time, 6 months, and the price growth is only 38%. Usually these two come together somewhere down the line, and so price should get caught up with earnings somewhere down the road. So the extreme is now 84. It's pretty high, but then again, because there's very little volatility, I am holding this. But let's take a look at the seasonal chart. On the seasonal chart, the best trade is in February, but if I search for a trade here in September, from September on, we get one again in October. As you know, most of the stocks will tend to rally in October. But in October, we get a 77% rating, not very high, not as high as some others, but the average profit is about 5%. So again, this is something I'm holding for the long run. So let's take a look at something else. Here's a chart on Adobe. I mentioned it in an email that I liked it. I bought it. I'm trading it. It moved from about $51 and change to about $155. So I think it closed at 155.76. So this is a trade, although it looks like a pretty good long-term holding too, because the same thing that I said on Visa applies here. The regression channel, very narrow spaces between the lines. So there's very little volatility in this time frame anyway. So it's something that I'll hold. And on the seasonals, um, we have a trade in March, but if we look in September, we also get a trade here. September 4th to September 18. And I think I'll be looking to trade it, sell it somewhere in the later part of September, depending on how the price moves. So that's as far as Adobe is concerned. And here's a chart of Netflix. Now, Netflix is more volatile. You can see these bands are further apart than the bands on Visa or on Adobe. So this is tradable. You can buy it at 9, sell it at 90, buy it at 10, sell it at 90, buy it at 10, etc. So I've traded it, and but I like it for the long haul because most people don't realize how popular Netflix is internationally. If you travel, you'll see that to be true. So I think Netflix is well positioned to continue to grow. And right now it's at 42.9 on the extreme, so close to the 50% line. And if you look at the seasonal, let's see what we get on the seasonal. You see, best rate is in January. However, if we look in September, if we look from September on, we'll find a trade in October, October 25th to November 8th, with a 91% win percentage and an average profit of 7%. So buying it somewhere here and holding it through the end of the year, maybe into February, may not be such a bad proposition at all. And here's a chart of NVIDIA. Of course, NVIDIA has been one of the best performing stocks in the market. At least it was the best last year, if I'm not mistaken. Right now, we can see that NVIDIA, the three lines are a little further apart than some of the other ones. So the volatility is a little greater, is somewhat greater here. NVIDIA is coming off the 10% line, so it's at 18%. So it has some room at the top, so to speak. And if we look at the seasonals on NVIDIA, we'll see that there's a trade right here in August. But generally, if you look at this highlighted line in yellow, you'll see that from about August to the end of the year, you get a nice move up. So this is about the seasonal time of the year for me to be trading or to be owning NVIDIA. That's one that I don't own right now, but I've traded it before. And here's a chart of Jounce Therapeutics. It's a very speculative stock, as I mentioned some weeks ago. The symbol is JNCE. They're in the immunotherapy business. And apparently they must have had some good development because the stock went from $11 and change all the way up to $17 recently in the last month. Doesn't have much history, but we could take a look at the seasonals. It's just 2 years. No point really investigating that. You wouldn't want to be buying it here necessarily because it's now overbought, way up there at 98%. So I would buy it again on some pullback. Okay, if we have some kind of a pullback here, I would look to buy it again. But of course, it's very, very speculative, and I don't buy too many shares. Let's take a look at something else. And lastly, we look at Microsoft. We haven't looked at this one in a while. You can see that the earnings growth has been increasing. It's growing faster now in terms of earnings, faster than price. So usually price gets caught up to the earnings. So we can expect more action from Microsoft here. It's right now it's at 40% on the extreme. There's room on the upside. And if we look at the seasonals, we'll see that there's a trade in October between October 22nd and November 5th, an 83% win percentage with an average profit of 5.72. Well, that's about all we have for today. So have a wonderful weekend, Labor Day weekend, and try to make some money. As my friend Tommy would say, make a little walking around money. Bye-bye. Talk to you again next time.